Hey guys, what's going on? Coming at you with a Tuesday morning video. Today I'm going to talk about Shopify. Ticker is SHOP. This is a stock I've owned for about 9 months now. I started buying this stock around 1100, 1080-ish, and then I've been slowly driving down my cost. Even at that evaluation, I really love this stock. I think the 52-week highs rallied to like 17, 1800, so this is a stock that will definitely get there, in the future. It's a platform that's great for small and medium-sized businesses. I feel like they're going to be a major threat to Amazon, especially if they keep raising their fees and all that stuff. Amazon's getting so greedy with the fees and the processing, and people are moving away from Amazon. I mean, I'm in the wholesale industry, and I actually see a lot of companies no longer using Amazon and starting their own stores, and then using Google advertising marketing, or even going off like Shopify platforms. So I see the shift happening. Most of my accounts are smaller, mid-sized businesses. So I kind of see it firsthand, and that's what really got me involved with Shopify when I saw that pullback off the 52-week highs. So obviously the stock's been down a lot more recently, which is fine. I really love this stock for the long term, so I've just been dollar cost averaging. So that's kind of a little summary of why I like it, and I deal with people that use it firsthand and ask for their feedback, and they all love it. So it's definitely going to be very important in the future, in my opinion. Some huge news just came out with this yesterday. They announced that they're doing a 10-for-1 share split. So it's actually funny, in the remarks when they said they were going to do it, I love when companies do share splits. Like Tesla's doing one, Google's doing one, Amazon's doing one coming up, Shopify is now doing one. There's another company I own that's doing one. I forget. There's another big tech company that's doing one shortly too. But anyways, a bunch of companies are doing share splits. Shopify is just another one that's going to do it. So it makes it more accessible in cost for people to afford. So a lot of times, like example, like TD Ameritrade, that's the brokerage I use to pick individual stocks. I know Fidelity and a couple other brokerages, they don't allow you to buy partial shares. I know Robinhood does, and maybe a couple other the smaller platforms do, but a lot of the bigger companies do not allow you to buy partial shares. So the stock is obviously still pretty expensive at $616 and some change right now. So a lot of people just can't afford it. Some people only like paying 20, 25, 50, 100, especially investors that are starting out, maybe that are feeling it out. It's a really big commitment if you're new to the market, you like the company, and maybe you don't have that much saved yet. So I see what they're doing. It doesn't, obviously the share split doesn't make the stock any more valuable, but I do like where their head's at, where it is more accessible to people. And, I think people are going to utilize that and take advantage of it. Most of the time, like when Tesla and Apple did the share split a couple of years ago, the stocks did rally right before share split, and they actually pulled back a little. Traders took their profits, and then it rallied back up. So usually, from my experience being in the market, I know this always doesn't happen, but usually when share splits happen, people get really excited about it. It gets talked about on CNBC, it gets real hyped up, and it's usually good for current shareholders. And you get more shares, so it's pretty sweet. So yesterday it had a 2.35% rally. That was the best stock in my portfolio I had. So off this news, the market was pretty red yesterday. I'll talk about that in a second. My cost base after driving it down from 1100 is $8.20 and 38 cents. So I'm still down significantly. Really not too worried about it. I'm kind of just chipping at it. If it goes down to like the fives again, I'll probably buy some more, but I've really been focusing more on other stocks. I actually did buy one yesterday. I'll talk about that at the end too. But yeah, so I'm happy with this cost base. I even like it 1,000, but the market's just gotta, if there's no good deals in the market or small caps run, and this one's kind of like a lagger sitting at like 950, 900 or 750, whatever it may be, 600 something, I'll gladly buy more shares than average cost down. But right now it's not what I'm really focusing on. So, and reason being is in my situation, my Shopify is pretty built out. It's where I like it to be dollar wise. So it has to be like a really silly deal and no other good deals in the market. So I'm kind of fully built out. So most of my positions, if you haven't watched my previous videos, I was buying really heavy in December and into the beginning of January. And then when the market really fell on its face, when like the SPY was 420, and I believe the QQQ was like 330 or 320, I basically went all in essentially. with a little bit of cash on the side. So that's another reason why it's sitting here. I don't, it's okay. I don't have like crazy amount of cash right now that I'm willing to do it just based on things going on in the market right now. I'm just kind of always want to have a bit of cash. You see where I'm at here. Because that obviously, if you have cash, it gives you a position of power. You never want to be out of cash when you invest long term. So the Dow finished down 1.18, S&P finished down 1.68, and the NASDAQ finished down 2.18. So basically, they all dropped at the end of the day, and I mean, my account got crushed today as a whole. Let me see what it was down my account today. I think it was down 3 or 4%. Let's see. Oh, no, it wasn't. Okay, I lied. So it didn't do as bad as I thought because I do have a lot of small and mid caps. So my account was down 1.24%. So it's actually not that bad. Shopify obviously helped out a lot. And some of the small caps held their own. So that's probably why it wasn't as bad as I thought. A lot of the big, large caps like Microsoft, Apple, Google, they really pulled down hard today. So that pulled down all the indices. So, usually what happens is when small caps find their bottom, then mid caps, then small cap or large caps are the last to fall. So this could be a good sign of the market kind of on, its last leg and downwards movement. Obviously the market ran up crazy the past couple weeks. I did actually lose half my gains from the bottom of March 16th or 14th. That was the bottom. And then 2-3 weeks later, I've lost half my profit. So now I'm sitting kind of in the middle, which is fine. I actually didn't buy when it was rallying those green days, that were those crazy green days. I didn't buy anything. I just recouped cash. And I kind of am glad I did that because the market did pull back. People are taking their gains and now I'm buying again. So it's I kind of got a good system. I feel good about it. I like all my positions and I try being transparent with where I'm at, where the stock is, what I'm doing. Now, if I was looking at Shopify and didn't own a position, I would absolutely buy right now. This is a great deal. It pulled back relatively from that little mini bull rally we had, and they're doing a share split. So this is a great time to enter, in my opinion, if you're not in it. So smalls did actually really good today. I can rattle off a few what I had that were positive. So what did good today? It's a small cap. Robinhood was up. That's a small cap. Matterport's kind of small. That was up. Smile Direct was up 3%. That's good. And that's really it. I mean, I guess there wasn't that many things up, but there was some green in my portfolio. It wasn't all red. CCL was up today, but CCL don't sleep on. I mean, I actually own that stock at $8. I bought it at the dead peak when COVID hit. So it's at $21 right now. So I'm really happy with that. But I think that's people are sleeping on the travel, and I just think it's going to be insane. They're not going to care about cost, and they're going to have some sick margins, I think, coming up. But they are in a lot of debt, and they got a lot of loans and got bailed out. But that's another story. So love CCL though, Carnival. So CPI data is tomorrow. That's big. So that measures consumer price index. It's going to be very high. I think the market has that baked in, so I'm really not too worried about it, unless it has you're at 11% inflation or something like that, or 10%, double digits. That's going to shock the market. But I think it's going to come in at 8.5, maybe a little on the higher side, 8.7, 8.9. It's expected. Obviously, the commodities like oil and stuff like that from overseas, there's clearly issues and supply chain problems, obviously, due to the war. So it's kind of baked in. It's kind of expected. I think the market is prepared for that. I do think this might be our highest reading, and then from here we might plateau and slowly go down starting next report, or maybe in June we'll see that. That's my opinion. So, we'll see what the report is tomorrow. I think a lot of people are wary about it. That's why the market's kind of doing nothing after hours, and it was red today. There's stuff going on still over there. Russia's still invading and stuff like that. So, it is what it is. Obviously, crypto, really like Bitcoin and Ethereum are the two I invest in. They do move very similar to the NASDAQ. They have been for the past year and a half. NASDAQ was down a lot today. Crypto and Ethereum, or Bitcoin and Ethereum, are both down today. So I did do some buying yesterday. PayPal, I bought at 109.21. So I bought in the AM hours of yesterday. I added about 5% of my position. This is turning into a top 3 position of mine. I love PayPal. Anything under, really honestly, anything under $200 I like it at. but at these prices, they're, it's just silly. So I bought it at 109.21 yesterday. The next time I'll probably buy it's 105, and I don't think it's going to go there unless something really bad happens. But because my position's built out fully, I don't really want to add any more. Again, if you're not in PayPal, this is another great stock to look in. The CEO dropped in millions of dollars at 120 recently, so that flag should be going off in your head if the CEO thinks stock's that disrespected. He puts in $1 million of his own company. He probably knows the company more than anyone else, and $1 million is a lot of money. I don't care how rich you are. So that's just food for thought. He bought at 121 or 120, so great buy in my opinion. I also did buy Ethereum. It hit 3K today, and I told myself if it hit 3K I'd buy because there was a TA line there. It was floating around 3K all day. I did buy about 50% more of my position in Ethereum. It's not a massive position, but I did buy Ethereum, and actually that balances out my Bitcoin to Ethereum. I'm 50-50. So I have 50% Bitcoin, 50% Ethereum. Love both of them. I feel like they're going to be used in two totally different ways in the future. I'm just building it out because I was a little late to the game with crypto. I've been watching it for years, but I started entering in after that massive peak we had. And when it started hitting like under 50, I started nibbling at Bitcoin. And when Ethereum was under 4,000, I started nibbling at that. So love both. That's kind of what I did yesterday. If you guys like this video, make sure you guys like, subscribe. If we can get to 700 subs, I know I'm close. Much appreciated. Until tomorrow, peace.